capital spending as a percentage of revenue has been coming down, and we predicted that in the beginning of the year, and we've revised that even and confirmed that and made it slightly better, I believe. The same for broadband can be said. I don't know. I never like to look forward and give guidance that that you don't know where a sale will go tomorrow. So the better way to look at is what happened this quarter and last quarter, which was the best in 9 years or so, last second quarter. So we've had this momentum now for a little bit. I don't know that it can continue to be 150% of the year before or even higher, but we are seeing north of 1 million broadband subs year in, year out. Why is that? Well, streaming is our friend. People want the best. They have now, our power users have 20 connected devices. They're using 600 gigabits a month. That's 10% of our customers. That's more than triple what the average customer is doing. And what, if you had to make a bet in 5 years, 3 years, 2 years, 10 years, will you look more like the power user today, or will you use less tomorrow? And I think the trend has been with smart devices, Internet of Things, gaming, all sorts of application, virtual reality, whatever might be coming next, you need the best network. And that's job one, and that's why I think it's sustainable.
Other people, Brian, said, you know, pay TV, we still have these cord-cutting wars, all this stuff. So, you know, it's worrisome enough to have a big presence in the United States with that. Now you've doubled down on that whole business. And in 20 years, I wonder what everything looks like at that point. Yeah, go ahead.
Well, I think that very fair question. First of all, we had a good quarter in video that we've seen many, many more competitors here in the U.S. And one of the things that I think investors will hear about today and can learn about is the structural differences, very significant differences between Europe and America in the pay TV market. First of all, free-to-air is much, there's 100 free-to-air channels. That's not the case in the U.S. There's, in some of the markets, each market's different from itself. There's lower pay TV penetration, more upside in Europe than there is in the U.S. And the difference is that the programming is called Sky Atlantic, Sky News, Sky Movies, Sky Sports, whether it's on our platform or on other platforms. And there's less new competitors because of some of those structural differences. And Sky made a tough decision, and I give great credit to the leadership. Back in 2005, they started to create light packages, what we would call light packages here today. You could buy it by the day or buy just the sports you're interested in. And so they compete with themselves and gave customers more choices. And that's why their results are balanced and growing. But they also have a broadband business, different rules that allow them to have broadband. They build some of their own facilities, but they lease others. They have a mobile business like we do, hardline phone business. And because their brand is so respected, they move and sell new products. And so they have a pretty exciting roadmap at Sky for the next several years. And as the markets change, great leadership evolves with it. This gives us tremendous flexibility and capability that we didn't have before to innovate, to attract content, to do global deals. I think people will be very pleased with how Sky performs. But it's early, and we're just going to have to show you.